Hello and welcome to all of you in my channel Blue Chip Finance. In this video, we will discuss about the net present value and other investment criteria or capital budgeting techniques, part 4. In this video, we will discuss about the internal rate of return. Internal rate of return is second most important criteria to choose the investment in capital budgeting techniques. Internal rate of return is an rate of return at which NPV or net present value becomes zero, and rate of interest that is lower than internal rate of return will turn to NPV positive, and interest rate that is greater than internal rate of return will turn your NPV negative. So it is very important criteria to choose the project. You can obviously understand at the start of the project through internal rate of return before further calculation that either this project will be beneficial for you or not. But here internal rate of return can be calculated through financial calculator or through MS Excel, or we can calculate it through trial and error method. Here we will use MS Excel to calculate it. Internal rate of return जो है इसको calculate manually अगर आप करना चाहें तो वो trial and error method है, जो कि एक इंतहाई lengthy method है, और normally इसको through financial calculator calculate किया जाता है या इसको MS Excel के जरिए इसको कैलकुलेट किया जाता है. तो यहाँ पे हम एक एग्जांपल लेते हैं. क्वेश्चन नंबर 4, कैलकुलेट इंटरनल रेट ऑफ रिटर्न फॉर द फॉलोइंग टू प्रोजेक्ट्स एट ऑल्सो कैलकुलेट देयर रिस्पेक्टिव एनपीवीज इफ अपॉर्चुनिटी कॉस्ट इज 12%. So there are two projects, project A and project B, and here in this question we are going to calculate two things. One is internal rate of return in which we will use MS Excel, and second thing that we will also calculate net present value. So time period is 6 years. If you choose the project A, then your initial investment is $24,000, and if you choose project B, your initial investment will be $20,000. And if you choose project A, then your cash inflows in result of investing this $24,000 will be $8,000. And as you are seeing here that cash inflows are similar, but in case B or if you choose project B, then your initial investment is $20,000, and in result of investing in project B this $20,000, your cash inflow for year 1 is 0. In year 2 you will get 4,500 in the shape of cash inflow. In year 3 you will get $5,000, and in year 4 you will get nothing. In year 5 $8,000, and in year 6 $12,000. So these two examples are different. This example is in the form of similar cash inflows, and this example is in the form of non-similar cash inflows. So in this case we will use PVIFA factor in the calculation of NPV, and in this example we will use present value interest factor or PVIF factor in calculation of NPV. But first of all we are going to calculate internal rate of return. So here is the way to calculate internal rate of return. First of all, it is already calculated that 24% and 9%. So as you are seeing here that the this is same question data which I am discussing with you, that in project A this minus 24,000 is your initial investment and these are your cash inflows. The way to calculate internal rate of return is very simple, that just place equal sign and type IRR. Here you are seeing that IRR formula is given, so just double select it, and after that just give the range. After giving the range, here after values place the comma sign and place some guess interest. Guess interest should be a reasonable interest rate. For example, I am choosing here 10% and press the enter. So internal rate of return is 24% for this project. So here once again I am going to just delete this, and once again equal sign IRR, internal rate of return, and after that give the range, and I am not giving here my guess and I am simply pressing. So it is 24%. Either you can give your guess or not, simply it is 24%. And in this case I am going to place equal sign IRR, internal rate of return, double click on it, and after that just give the range and close the parenthesis and hit enter, and that is 9%. So internal rate of return is 24% for project A and 9% for project B. Here 9% for project B. So what is the meaning of this? It means that at 24% interest rate your NPV for project A will be 0, and if you are trying to get some profitability, then your interest rate will be less than 24%. If your interest rate is greater than 24%, your project will become loss oriented, and in case B your internal rate of return is 9%, which means that at 9% your your net present value for project B will become 0, and if interest rate is less than 9%, it will become profitable. And if your interest rate is greater than 9%, or you can say that if your opportunity cost of capital is greater than, as you are seeing here in the case of project B, here your internal rate of return is 9%. So we know that project B will not be profitable because your opportunity cost of capital is greater than your internal rate of return. So now we are going to calculate NPVs for these both cases. Time period is 6 and opportunity cost of capital is 12%. So for project A, cash outflow is minus 24,000 plus 8,000. Your cash inflow is 8,000, so put 8,000 here, and PVIFA factor which is calculated here 4.111, at 12% and n equals to 6. And finally your NPV of project A is 8888. But here in case of B, project B, your cash outflow or your initial investment is minus 20,000, and here we are going to break the formula and using present values. So at time 1, your cash inflow is 0. For second time period 4500, third 5000, fourth 0, fifth 8000, and sixth 12,000 inflow. So simply place the cash inflows here, and your present value formula will be placed here: 1 plus 0.12 raised to power 1, 1 plus 0.12 raised to power 3, and so on. And finally your NPV of project B is in minus term, minus 2234.75. so obviously to invest in project B is not profitable, and this is the same criteria as we were discussing while in the calculation of internal rate of return, that your internal rate of return is 9% for project B and opportunity cost is greater than your internal rate of return. So project B will turn into negative NPV. So here for the calculation of PVIFA, you can use the PVIFA table. So at 12% and at 6 time period, 6 years, and 12% interest rate, your factor is 4.1114. So thank you very much, and stay touched and stay blessed. Take care of yourself and the persons around you. Thank you.